Ladies and gentlemen, good day and welcome to Ganesh Benzoplast Ltd Q4 FY2024 earnings conference call hosted by Capital Square Financial Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Lakshmi Chalwadi from Capital Square Financial Service. Thank you and over to you, ma'am.
Good evening, everyone. On behalf of Capital Square Financial Services, I welcome you all to Ganesh Benzoplast Ltd Q4 FY24 earnings call. Today, we have with us Mr. Rishi Pilani, Chairman Managing Director, and Mr. Amar Kabra, GM Finance, to discuss outlook on business and answer your query. Over to you, sir.
Thank you, Rashmi. Good evening, everybody, and thank you so much for joining us for the Q4 and the year-ended FY24 conference call. We will start the call by taking you through the business highlights for the period under review, after which we will open the forum for Q&A. I hand over the call to Mr. Amar Kabra to take over the financial highlights.
Good evening, everybody. This is Amar Kabra, GM Finance. So, I will take through key highlights of the audited financial results for the financial year ended 31st March 2024. So, on standalone basis, during the financial year ended 31st March 2024, the company achieved a total revenue of 2267 million as against 1927 million in the previous year, with an increase of 18% Y2Y. During the financial year ended 31st March 2024, the standalone profit after tax for the year is 606 million as against 509 million for the previous year, with an increase of 19% Y2Y. During the Q4 of financial year 24, on standalone basis, profit after tax is rupees 162 million as against rupees 123 million for Q4 of last year, with an increase of 30% Y2Y. During the financial year ended 31st March 2024, the company achieved a total revenue of 4771 million on a consolidated basis as against 4208 million in the previous year, with an increase of 13% Y2Y. And during the financial year ended 31st March 2024, on consolidated basis, profit after tax is 614 million as against rupees 551 million for the previous year, with an increase of 11% Y2Y. So these are the highlights.
Thank you, Amar. We would like to now open the forum up for any question and answer that the participants may have.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Jaimin Modi from Jaimin Modi and Company. Please go ahead.
Yeah, good afternoon. Am I audible?
Jaimin, your voice is coming muffled. Can you speak through the handset, please?
Okay. So, am I audible?
Hello.
Am I audible?
Yes, go ahead.
Am I audible now?
Much better, sir. Thank you.
Yeah, so I have a couple of questions. Starting with, I would like to ask that what kind of outlook the company is looking for the chemical sector for the coming financial year? Like, what is their own outlook for this particular sector? And the second is, should I wait for one or I should go ahead with my second question?
No, please go ahead,
Yeah, my second question would be, what kind of change in management we are looking for the chemical branch or chemical department?
Okay. So, Janine, your first question is about outlook in the chemical sector. See, regarding the plant and its products themselves, there continues to be a very, very strong demand in the market for the products that we make. And we believe that now we are able to, we are looking at optimizing the purchases and all together with the entire group, which is the infrastructure and other areas combined. So we believe that we can also bring some reduction in our raw material and project purchasing for the chemical division. So our hope is that we can actually improve the performance in the chemical sector. For the change in management, we've already asked Mr. Ramesh Punjabi, who's been with the group for almost 30 years, and he was also instrumental in setting up these plants and running them for a long time. Currently, he's on board as a technical director. So he's the one who's right now leading the team. He's revamping the team also. He's hired new people. He's from IIT Bombay. He's a chemical engineer from IIT Bombay, so he understands how the chemical plants run. And along with the support of the overall purchase and marketing teams together, that is the plan going forward to run the chemical division.
Jaimin, do you have any follow-up questions?
That's it. Thank you.
Next question is from the line of Yash Dedia from Maximal Capital. Please go ahead.
Hello. Good afternoon, sir. Thanks for the opportunity. Sir, I had a couple of questions. Firstly, on the recent fraud which has happened on the company, so what would you like to add on the governance or on the security part of the business?
Okay. Is that your question, Mr. Yash?
Yeah. First question is that.
Okay. So, see, having, understood what exactly transpired and after taking the relevant actions, we have definitely now changed a lot of mechanisms of approvals on how certain approvals are taken within the systems, how there is interaction with the outside stakeholders, especially banks and other creditors with the company itself. We have changed the approval systems for payments within the company in terms of the limits for how much are authorized. But and we are looking at it. So we are looking every day to understand what more we can do. But we are fairly confident that as of now, even if you see, even for this one, as I have already stated in my declaration to SEBI and everybody, that the company did have enough systems in place to ensure that the company itself is not impacted financially by any of these transactions. So that much. So there has been no transaction that has been routed through the regular accounts of the company. There were enough checks and balances in place to ensure that no funds could move out of the company's regular accounts. So, and no funds have come into any of the regular accounts of the company. So we have ensured all of those checks and balances already. We are definitely making them stronger.
Okay, so these funds came into a separate account inside the company book and then went out.
Pardon me, can you repeat the question? Your voice is a little bit not clear. Sorry, Yash.
Hello, is it now audible? Is it now better?
Yeah, it's better, yeah.
Yeah, so these funds were remitted into the company's non-regular account. So it was under company's account or was outside the company's account right from the beginning?
No, so right from the beginning, the funds were routed into an account that the company was not aware of. The company has not opened that account. Nobody from the company, like the directors, have not given any board resolutions to open those accounts. And we've taken all the necessary steps to prove this also to the authorities, including police complaints and civil court suits.
Okay.
So like I said earlier, the regular accounts were well protected.
Okay. And so the party was given the loan. What is the stance they are maintaining right now?
So see, like I've already stated, like one of the parties has already waived all its, we've already given that declaration, has waived all its claim against the company. So
amounting to?
There are about 7 or 8 parties,
Oh, okay.
out of which one has already waived all its claims against the company. We have already done a steady declaration of that, and for other parties, we are hopeful that we should be able to convince them to see reason. But if they don't see reason, then we'll have to go through the process which we have already initiated of completing the court cases and then getting a waiver, hopefully, from the courts.
And in case if the decision is not in our favor, will the party in default from our end will be indemnifying the company or not?
Again, I'm not. You mean the party who has given the loan?
Who has defrauded the company?
So they have given us indemnifications for any of their actions if that leads to any financial liability on the company.
Okay.
So they have given the indemnification to us, yes.
Okay. And on the LPG tank expansion plan, so where are we on the work and the approvals that we were supposed to get it from the authority?
So the work, like I've already said, the work is already commenced and the construction is ongoing. We are already installing equipment that are of fire protection and all that nature. I have already explained before also, so we are looking at increasing the height of the tanks and for extra protection, building fully outer wall concrete tanks, for which the file is moving through the various departments. As you know that almost last month or 2 months, most of the departments were engaged in election duties and all these things. So we are hopeful that now we should get momentum in our approval process and get it closed shortly, so that at least as soon as the monsoon finishes, which is somewhere around August, September, then the construction on the main tanks can start in full swing.
Okay, so we will be going forward with 2 into 30,000 KL plan.
Yeah, the 2 into 30,000 tons. Yes, that's the plan as of.
2 into 30,000 tons, and the commercialization of the plant will be somewhere in FY27. That does not change.
That does not change.
Okay. Okay, great. Thank you so much. That's it.
Thank you. Next question is from the line of Ankur Savaria from Equity Master. Please go ahead.
Good afternoon, everyone. So my question is regarding the Goa terminal. Has there been any update on receiving new, because this is the only capacity that is not occupied as of now. So just to increase the margin, this revenue for next 2 years until we get our LPG cylinder, LPG tanks operated, what will be the outlook on the increase in revenue for next 2 years, sir?
So for the next 2 years, there are a couple of things. Number one, whatever inflationary growth we keep getting, which is in the range of 5 to 7% per year, that we are expecting. In addition, we are always, like I said, looking at somehow getting a better product mix for the terminal, so that we can get a better revenue per ton. So if you would have seen on terms of throughput basis, if you see our throughput in the year before was 1.658 million tons, as against last year our throughput was only 1.4 million tons. But this is because the more high value product you go to, the throughput drops, but your overall revenue increases. So that is what we are continuously striving to do.
Okay. And how much do you think the capacity would increase by increasing the heights of the existing tanks? Is this process already ongoing, or is it yet to begin?
So that part we are, so wherever possible, we are doing that activity. But you have to understand that increasing the height of the tanks also requires a complete modification of the foundation, because the load on the tanks changes.
Mm-hmm.
So unfortunately right now, or fortunately, we are in a position that we don't get tanks empty. Though this quarter we have done a lot of monsoon revamping of our tanks in JNPT and also in Kochi. But as of now, height increment has not been taken up.
Okay, so what I see is that the only capacity that is not occupied as of now is the Goa terminal. So, and what time do you think that the entire LPG terminal that we are doing with the BWC, what time do you think we can get it finished, sir, earliest?
Like I said, I've always maintained that we should start seeing revenues from it in FY27, and that plan hasn't changed.
Okay, sir. Thanks a lot, sir, and all the best on my side.
Thank you.
Thank you. Next question is from the line of Dhruv Mahesh Bajaj from Smart Sync Investment Advisory. Please go ahead.
Thank you for giving me the chance to ask the question.
Dhruv, we cannot hear you. Can you speak through the handset, please?
Yeah. I'm audible?
Little better.
Yeah.
Yeah. So, sir, before congratulating the company for a decent performance, I must say that there has been a serious dent on the investors' confidence in your company's corporate governance, post this saga especially. And I was under the impression that majority of the claim has been afforded rather than only one out of the 7-8 parties that give us the loans. But regardless of that, my first question was that how are we giving exit to Mr. Ramakant Pilani and the co, considering they have resigned from the organization and we are unable to assess their shareholding in the business. So if you can explain the cap table on the promoter's holding company, where both the families must have some ownership split, to get an idea about, like, are they exiting the business, or how should we look at this going forward?
Okay, so just to give a basic idea, like while you are saying that it's only 1 out of the 7 or 8 who have done, but you have to understand that this process is not an overnight process.
Right.
So while all of us would appreciate that everybody would just wake up one morning and say, yeah, company is not at fault, let's just leave them and go away. It is a painstaking process. But regarding your point on the dent in the corporate governance, I would request you to please appreciate the fact that if there was a lack of corporate governance, there would be money that would have been removed from the company's regular accounts, money the company would lose, and we would go after recoveries. None of that is the case here.
Right.
So please understand that, yes, while I'm not denying or trying to defend the fact that, yes, we have to do things better and improve our systems more. But I would also like for you to appreciate the fact that company has not lost a single paisa in this transaction. So somewhere we have done things right. So to assure that. Regarding Mr. Ramakant Pilani, yes, he has resigned and his son is also resigned from the board. Overall, in terms of joint ownership of Ganesh Benzoplast, their family as a whole owns approximately 1% of the company.
Okay, that is very helpful, sir.
Rest all is not with them; it's with other promoters. So that way, there is no restriction or some action that they can take which can sort of impact the company. So that is the thing that.
Got it, sir. And given
the entities, and also important part is that the entities that are holding the common promoter shareholding, they are all controlled by us. So they are not under their control. So the controlling stake within those companies is also belonging to us.
Got it, sir. So I was just trying to understand, in case since they have exited from the business overall, so how will they exit their ownership structure? So that was the whole idea behind this question.
Yeah.
And sir, is it correct to model a 7 to 8% revenue growth for the next 2 years given the full capacity utilization? Or do we expect that the new capex that we are planning to increase the height of the LSC terminal will happen within these 2 years? So how should we look at that?
As of now, like I said, that already this quarter we have undertaken major revamping of our tanks, and also, I've already mentioned that Cochin terminal we have been the L1 bidders for a 4-year contract with IOC to store ATF and ethanol.
Right.
So the tanks are being part of the tanks. Part of the tanks are already with BPCL for furnace oil, but part of the tanks are being retrofitted to handle ATF and ethanol. So since we are already doing such a major revamping work both in JNPT and in Cochin, we would like to not take the tanks down again during the year for more revamping and height increasing work.
Got it, sir. That is very helpful, sir. And so last question was that the other guy who forged the signature with Mr. Ramakant Pilani, so is he a part of our management team or was he an outsider? So I just wanted to understand the outsider. Got it, sir. That is very helpful. That's it from my side.
Yeah.
Thank you.
Thank you, Jay.
Thank you very much. Next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Hi, am I audible?
Yes, please.
First, I think Congress, the way you have built this business in the last 7-8 years and the plans you have, I have 3-4 questions. So first, we know the LPG terminal will come live somewhere in FY27. But for next 24 months, if you can break into 3-4 milestones, how the project will be executed, like, this time will take for hardware setting, then construction, then approval. That would be great. My second question on the same, because it is being done through 3 parties coming together. And when multiple parties come together to execute something, there is always a risk in terms of, things not going the way everybody is planning. Everybody has their own aspirations. So how are we de-risking from those kind of risks, and what are the risks you see? And my third question is, so far on JNPT, I think we have been able to operate and get that annual rental yield increment of 5 to 7% more than that. But given one of the biggest player, one of the most efficient player, they also have plans to come to JNPT. Do you see going forward we will have the same kind of advantage to take that inflationary increase? I mean, in terms of a per unit, are we competing on the kind of efficiency they have? If we can get your views, that would be great. These 3 questions I have.
Okay. So your first question was to break up the milestones, right? So see, generally in what we are expecting is to complete the approval process by July and August. That is our first target. So that like I said, by August 10th, September, we get into full-fledged construction of the tanks. Generally, the tanks, the pipelines, everything moves parallelly in construction, and most of the design work has been completed by us already, since the project is in pipeline for some time. So what we expect is that there will be no major milestones as such. The project will progress like a normal tank farm project, and but it just take about 2 years, and take that. Regarding the three parties coming together, while I agree that what you're saying is there are different aspirations and it adds to the risk, but in our case, actually the parties have been got together to de-risk the project, in the sense that all the parties are contributing in their own way to ensure that the project is de-risked, not risked. So like BW LPG, they are the biggest movers of LPG in the world, including India, having a fleet of more than, I think, 1,000 ships, big and small. So you have a supply chain which is ensuring that their product movement will be there to the terminal. Today in private parties, CPIL is one of the biggest off-takers in the private sector, and they have undertaken to underwrite the terminal to a certain capacity, which de-risks the loans and other things that the project has to take. So I think in our case, we have actually a very good set of partners, very positive-minded partners, and all are looking to add value to make this a success. So that is my take on the partnership here. And the third part was that there is competition coming in JNPT, and that is GBL has certain inherent advantages. Number one is that the land that we are sitting on is much lesser priced than what the new entrants are bidding and taking lands at. So we have a very big competitive advantage in terms of the land pricing. The assets are already built, and we are sweating them for quite a few years. So we have an advantage in terms of our pricing, profit per KL in terms of pricing. And number three, none of the new players that are coming are building tanks that can handle class products like A, B, C class, the hazardous products. They are not building those tanks. Where our focus is to shift into those products more and more. One of our biggest volume movers is linked for the non-haz side, is linked to the rail movement, and we are the only people who have the rail facilities at JNPT. So there we have sort of a monopoly in holding that business. So we are fairly confident that while new entrants may come, but on a standalone basis, they will not be able to compete with us here.
Sure. I think all of this was very well explained. One last question. So this year our throughput, and I think you mentioned also, compared to last year 1658, this year our throughput was 1404, and still we could do better in terms of rental revenue. My question is how much scope we have further left in terms of utilizing it. We have a 90% utilization. I mean, is it like the premium mix is only 20% and it can go further? If you can give some color around it, I'm not looking for exact number, but how much scope we have to improve it further?
See, this is not a very simple question to answer, because every time you do a product change, you have to, work on the product, the customer, the sourcing and everything, and get the product shifted. Sometimes we are shifting it from port to here, sometimes from, let's say, a ISO container packing to a bulk container packing. We do a lot of these things. So all I can say is that we are continuously trying to go for that, and we are also like I said, this quarter we have revamped some of the tanks at JNPT with that in mind, that we would like to handle more of such products rather than the normal non-HAS products. But I don't have an exact answer as to what is the exact scope in terms of tonnages or percentages, because these can vary. You can get a 10,000 ton commitment in a day, and you may get only a 1,000 ton commitment in a year. So.
Got it. That helps. Thanks a lot, and wish you all the best.
Thank you very much, Kumar.
Thank you. Next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity. So I have a couple of questions. First is regarding our chemical business. So what is the current utilization at our chemical business?
It's a 75%.
75%. Okay, so what kind of guidance do we have for this segment with respect to utilization for this year?
See, now the management has been changed for the chemical segment. So obviously we are seeing a positive performance in the chemical segment. And in last 2 quarters, there are certain issues with the Red Sea and Nigerian currency. So we are facing a trouble with that because our almost 20% export sales is on Nigeria. So Nigerian Naira was around 800 in last 2 quarters, and certainly it went to 1400. So there was you can see in the result, there is a downside in the chemical segment on revenue side also, as well as tax level also. But this problem gets resolved in next 2 quarters, and with the new management and the new engineers and all these things, obviously we'll see a great performance in the chemical segment. We can achieve easily 95% from current level of 75%.
95%, right?
Yeah.
Okay. And my next question is regarding our LPG plant. So what would be the revenue potential from this plant, and how much money are we investing into this plant?
In LPG, our estimated capex is around 700 to 750 crores. And it's all depend on the throughput. For one throughput, we are getting almost 80 crores of the revenue, 70 crores. And assuming 3 throughput as a reasonable, we can easily achieve around 200 crores of the revenue.
And EBITDA margin would be somewhere around 75 to 80%, right?
80%, in fact 80%.
Okay. Thank you, and wish you all the best.
Yeah. Thank you very much.
Thank you. Next question is from the line of Prabin Meman, individual investor. Please go ahead. Prabin, may I yeah, go ahead.
Yeah, can you hear me?
Yes, we can.
Yes.
Brilliant. Hi, Rishi. Thanks much for your patient explanations on the corporate governance side. I just want to understand. I have a feeling on. What were the reactions from the recent investors? All these are top grade investors, the Malabar Fund as well as Anil Goel, in terms of once they understand the corporate governance, because I'm being a microcap analyst to actually track all those microcap companies and also quite extensively write on blogs. What I understand from the company's stock price performance, which is actually below the QIP prices, how much of an impact in terms of the market sentiments on the current, the recent transaction is one of the questions that I have. The other question is, I recently see that you already have an agreement with 63 Idea Labs in terms of settlement pertaining to this transaction. What is the impact of the other maybe like 6 to 7 odd people involved in the transaction? Does that really, because the entire amount in consideration is somewhere around 40 crores, right? So just a color on that.
So I'm sure that our investors, like you mentioned, we have had calls with them, and they have always said that they support the company fully. They've understood the matter, which can be seen from the fact that they are, they are not out here doing anything which can harm the company. Number one. Number two, your question was that about the settlement with Idea 63. So first of all, let me clarify that there has been no settlement. It's nowhere in the declaration we've used the word settlement. It is very clear. They have waived all their claims against the company unconditionally.
Absolutely.
So it's because settlement sounds like you pay somebody something and then they do give you something. That's not the case. We have not paid a single paisa to them, and nor do we intend to pay anybody of all of these other guys. Like I said, everybody has a different mindset. Some people realize faster that there is no point in pursuing claims against the company because the company is not at all involved in it. Some people will take longer and it will be a more tedious process. That's the difference.
Okay, thanks much for your explanation and all the best.
Thank you very much.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Jason Sheda, retail investor. Please go ahead.
Hi, thank you for the opportunity. Can you confirm if the debt for the LPG project has been tied up? Have you achieved financial closure there?
See, we have already got a term sheet from one of the premium banks for the debt, and another government fund has shown their willingness. We don't foresee any issue with raising the debt because obviously we have in our JV agreements proper guarantee mechanisms from all the stakeholders, especially BW parent companies, and there is a clear-cut offtake agreement which ensures that there is no chance of any debt default. So I mean, we are not bothered. We are not really concerned that raising the debt will be an issue.
Okay. And with respect to the Mangalore port, is there an update? What is the status on that one?
See, Mangalore port, there was a technical issue with the land allotment that there was a bid validity period that got extended, which the port overlooked. So we are trying to figure out now what to do with that because technically the tender allotment period had passed from the time the bid allotment was given. So we are working with the port to see what can be sorted out in that, and we are trying to resolve it.
So it means that it was a technical issue. We will not be able to start the operations, and we don't have an outlook when this will be solved.
No, so right now we have not taken over the possession of the land as of now.
Okay. All right. And with respect to the JNPT port, we kind of started the operations there in the 1990s. So a lot of tanks would kind of be closer to the end of life and things like that. So, pardon my ignorance, but just help me understand how do we take care of the end of life of the tanks, and how do we keep them in the best of their health, the infrastructure.
So you will find terminals still in operation. They were built in World War I, somewhere in 1918. So in India, the thing is that it's not that the tanks reach end of life, but just like every other equipment, they need a regular maintenance, which I just described. That just like this quarter, we've done a lot of maintenance in our tanks in JNPT. So basically what you do is there is a system of testing for the thicknesses of the shell of the tanks, which is done yearly. And when the thickness is reduced below a certain threshold value, then what you have to do is that particular part of the tank has to be replaced with a new part, with a new steel shell. So that is your question on how do you do it. This is the process to do it.
Okay. So then to do this every year, we must be incurring some kind of a maintenance capex.
Even sorry, your audio is not coming clear.
Yeah. Okay. Is it better?
Yeah.
Yeah. So I was asking, so to take care of this maintenance, what maintenance capex do we foresee for FY25? Hello? Am I audible?
So your audio was not clear. Can I request you to repeat the answer?
Yeah. So on an average, there is maintenance capex of around 12 to 15 crore per annum basis, and this year it will be slightly more, around 20 crores expected for 25.
At a console level or only for the JNPT?
Only for JNPT.
Okay. And if I may ask, at the console level, how much would be the capex?
I think for other terminals, I don't require much more than 2 crores.
Okay, so around 25-27 crores.
Yes, around 20-22 crores. Yeah.
Okay, all right. Thank you for answering my questions. Thank you.
Yes. Thank you.
Thank you very much. Next question is from line of Kumar Saurabh from Scientific Investing. Please go ahead.
Yeah, I have few add-on questions. So one question is on the other operating trading income, and this number is little volatile. Like FY22, we have 25 crore, then 8 crore, then 19 crore. So my question is, is there a way to assume how this number will flow or this will remain volatile? That is one. And second is again on the other income side. I think FY24 we had other income of almost 16 crore. So what is the cash on the books? My understanding is when we are executing this major capex, a lot of that cash is going to utilize. So I mean, I just want understanding like in next 2 years, is this other income is going to go down? How this will shape up? These two questions I have.
Yeah. So other operating income include mainly the you can say the new activity started in the current year 23-24. That is a collection of wharfage with the JM Bakshi thing. So that is means coming to your top line. So after rental income, that is your other income you can say. So around 15 crore was the top line for that wharfage income, and other part constitutes the interest income and some trading activity, some EPC, one small contract going on in the standalone contract, standalone balance sheet of the GBL. So that all the combined constitute that other operating income.
Okay. So this 15 crore, is it consistent, and is it also on equal kind of EBITDA margin, or is it too low in terms of EBITDA margin to consider?
No, so this, why we specially make sure to carve this out is because this income is, something that is non-core business related, but it's like complementary services sometimes when you provide to your customers, which are not really high margin. But you do it as a part, like what Amar just now explained, like when JM Bakshi took over one of the jetties in JNPT. So we provided this additional service to the customers that we will, as a console, collect the rent and the wharfage and everything, and you just see a single invoice. You are not seeing, you're not dealing with multiple parties in this. So the customers like that, but in that, we don't really make any margin on the wharfage side.
Got it. So the volatility in this other income will not be impacting the profit.
Yeah. So so this part should be considered like just as other income, which is not going to have a high margin. Nor does it have any significant stability in terms of continuity, because if tomorrow we decide that it's just too much work to collect wharfage on behalf of JM Bakshi and pay them and collect them. Just tell the customers, you please go and deal with them directly.
So hardly there is 4 to 5% of margin in this purchase.
Got it. Thanks. That's what I had. Thank you.
Thank you very much. Next question is from the line of Naveen from NS Capital. Please go ahead.
Good evening, sir. Am I audible?
Yes.
Yeah, good evening.
My question is on the storage tanks, sir. Is it possible that you can provide an approximate split of the various compounds that are getting stored? Like we have seen from the presentation that there are glass products, there are edible oils, then there are industrial chemicals. Just an approximate color on which one is getting stored majorly.
Majorly, as of now, you can see. I would like to stick to a broader rather than a detailed breakup. A broader breakup is, you can assume that as of now about 60% to 65% of our products are HAS, and about 30 to 35% are non-HAS.
Non-HAS, when you say, you mean class A, B, and C, sir?
Non-HAS is non-hazardous. So those are the edible oils, the molasses, the lube oils. Yeah.
Okay. 60% is HAS and 40% is non-HAS.
Yeah.
And the increase in height of these tanks, is it for the present tanks or is it for converting it into storing the LPG, sir? I assume the LPG is a different set of tanks altogether, maybe a pressure vessel kind.
Set of tanks that has nothing to do with the increase in the height of tanks. That, like I said, that is a separate activity to be taken up to increase the capacity of the existing tanks.
Got it. And my last question is, sir, since this LPG is coming live only in 27, so what would be the revenue? What would be the sources of revenue growth between now and FY27, sir?
So, see, between now and FY27, like I said, we are looking at increasing our margins through change of chemical, the product mixes. We are hopeful that with the new system and governance we have put into chemical division, we should be able to get growth of at least 10% to 15% there, which was stuck up due to bottlenecks. And of course, we are always looking out for new areas to expand and develop. So that always remains open on the cards.
Appreciate that, sir. I take this opportunity to also tell you that we are all standing with you on this tough time when you wade through the fraud case, and we would like to see you come out even more stronger. Thank you.
Thank you so much. Thank you so much.
Thank you. Next question is from one of Poonam Mali, individual investor. Please go ahead. Poonam, may I request to unmute your line and go with the question, please?
Hello, I am audible?
Yes.
Good evening, everyone. So I would like to bring your attention to the auditor's report. So why did the auditor refrain from auditing the financial statements of the 6 subsidiaries and the 2 associate companies?
See, there are 2 audit reports. One is audit report by the individual auditors of the subsidiary, and that audit report has been consolidated into the parent company's audit report. So obviously the parent company's auditors cannot go and to see the entire auditing and entire accounts of the subsidiary. So it's a general comment. In all the balance sheet you can see that we have just gone through the audit reports of the auditor, and we have not gone through the entire auditing of the subsidiary. So that is standard procedure. And whatever comments the subsidiary's auditor has passed in their audit report, they are incorporated. So that's it.
Thank you.
Okay. Anyone?
Next question is from line of Suraj Gupta from Rabbit Research. Please go ahead.
Hello.
Yes, Suraj, you are
Audible?
Yes, you are.
Yeah. So, just one question. So if we see quarter-on-quarter, so this quarter, we have seen that the margin has been impacted, so due to the chemical division. So, can you please highlight or give some light on that? Because I've joined the call a bit late.
Yeah. So this question I already answered, but I'm repeating again. So since in last 2 quarters, like December quarter also we have faced the problem in chemical division, and in March quarter also we have faced this problem. Our 20% of the DIM export is to Nigeria, and you have seen that Nigerian currency, which is Nairo, was around 800 in November and December 2023, and it went to 1450 something for US dollar. So due to that, there are no USD available for the Nigerians to remit. So that is one of the issue. Then other issue is that Red Sea issues and problem in the Middle East. So all these have impacted our chemical division. But I think gradually from second quarter onwards, we are overcoming with all these bottlenecks, and we will return back to our original sales. And obviously, with the new management, we will get better efficiency as compared to the past quarter in chemical segment. So this is the temporary phenomenon.
Okay. Got it, sir. Got it.
Yeah.
That's from my side.
Thank you very much. Next question is from the line of Sudhir Badia from OTM Capital Partners. Please go ahead.
Yeah. Hi, good evening. I'm sorry, most of my questions have already been taken up. I'll join the queue if there are any further questions. Thank you so much.
Thank you very much. Ladies and gentlemen, due to time constraint, we'll take that as the last question. I'll now hand the conference over to the management for closing comments.
Thank you. I would again like to thank everybody for joining us and taking out their time this evening for our conference. We remain available to answer any further questions. Please feel free to contact us, and we will be happy to answer all questions. Thank you so much.
Thank you very much.
Thank you, everyone. Thank you.
Thank you. On behalf of Capital Square Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.